Good morning, everybody. It's Larry Steiness, and I am the Crazy Options Trader. I've got some really cool stuff for you today. I'm going to talk to you about playing the market when it's going down. But Larry, the market's about to hit 20,000. How could you be playing the market going down? Oh boy, let me show you why, and let me show you what's going on, and I'm going to show you how to do it. Okay, first of all, take a look at this graph, right? See this? This is the 3-month graph of the Dow right now. And you see this right here, the very end over here? This to me is what I call a rollover. This is where the market starts to go down. Now, if it isn't obvious to you anyway, the market's about to hit 20,000, or it may or may not hit 20,000 by the end of the year. It really depends on what happens over the next 2 weeks. But either way, as close as we are to 20,000 or at 20,000, people are going to start to get worried. You remember, these fund managers, they like to make money. They don't want to be the ones holding the bag. So if they're the ones holding the bag, guess what? Their investors get really mad. So they're going to start thinking about getting out of their positions now, taking some profits, waiting for the market to go down, which, by the way, they're going to cause the market to go down because they're doing that, which is hysterical. But that's just the way it is. That's what happens when the market starts to get too hot. It has to come down. Now, I've been predicting a 2 to 3 or 4, even $400 point, I should say, drop over the last couple of days, the next couple of days, whatever, and I still see it happening in a normal market. This is the craziest market I've seen in the last, 8 years. I wonder why. But anyway, it's the craziest market I've ever seen in the last 8 years, so, there's a little bit of doubt when I say I see a 3 to 400 point drop, but everything tells me by this chart, by what we just saw, by what's going on, that the market is about to come down. So let's talk about how we're going to play the market when it comes down. So first of all, if we go over to the buy-sell chart, all right, we got Facebook's hovering right around 120, 121. I'm looking for anything below 117. Now, you can buy puts. I'm going to talk about puts in a minute. You can try to play that down. I'm a little concerned about Facebook. The only reason I'm concerned, I'm kind of staying away from Facebook for a little while, maybe because I was burned. But more importantly, I think it's because what happened was when there was the sector rotation, when all the money went into Bank of America and into oil stocks and everything else, Facebook trashed. And it trashed only because of that. It didn't trash because it was supposed to trash. Facebook's a great stock. The reports were great. The earnings were great. But what happened was they moved money out of here and moved it over here. My concern is that as the market starts to go down, and you saw the rollover, it starts to go down, people are going to say, I want to go back into Facebook. So Facebook may actually go up before it goes down. So that's why I'm kind of shy on Facebook right now. I'm trying to stay away a little bit. But anyway, Apple's clear. I have puts in Apple. I'm going to explain puts to you in a minute. I got puts in Apple. I'm waiting for it to go down. Netflix, I'm actually waiting for about a 119, and I'm going to jump in. I'm going to buy calls. Chesapeake, I'm in on puts. And actually, Ford, I'm in on puts. Sorry, Linda. My girlfriend has Ford stock. I bought it for her, but it's only going to go down temporarily, and in 2017, it's going to take off. So let's talk about puts, all right? So puts, a very different play than what we've been talking about before. And how puts work is basically, puts is a guarantee. If you remember, we talked about the guarantee that somebody would sell you the stock at a certain point. Well, puts is just the opposite. It guarantees that somebody's going to buy the stock at a certain point. So let's use Facebook. And Facebook's running at 120, right? Now, if I can pay someone, let's say $2 a share, to guarantee that they will buy the stock from me no matter what it is in the next 90 days, I always like to use 3 months, 90 days, in the next 90 days, they guarantee me that they will buy the stock from me for 120 no matter where the stock is. So let's say the stock goes down to 115. Okay? So if the stock goes down to 115 and they guarantee they're going to buy it from me for 120, I have $5 intrinsic value, right? Because I made $5 because the stock went down to 115. And if I pay $2 for it, and I'm going to make $5, then I made a really nice profit. I made 150% profit, right? I made $3 on my money. That's buying puts. So puts a promise that someone will buy the stock from you at a certain price. Now, just like calls, you could have in the money puts, you could have out of the money puts. I'm going to go into this in another video, but in the money and out of the money and near the money, all the differences. But more importantly, you can see how this works. So, if you can see how this works, what I'm going to do, or what I'm doing right now, is I have puts across the board. I have absolutely no calls, which is actually unusual for me. I usually have 1 or 2 calls also, but I have puts in Bank of America with a strike price of 22. So I'm looking for Bank of America to go below 22. I'm actually looking for it to hit around 19, and then I'm out. I also have Apple. And I have a price at, I believe it's 115 is my put price, and I'm looking for 110 to get out. I have Chesapeake at 7, so I'm looking for 6 1/4 to get out. Anyway, those are my plays. So that is what I'm doing. I'm looking for the fall. So if you guys start to hear the market falling, you know I'm very happy. So if you want to find out a little bit more about this and how this all works, I suggest you download my free ebook. You can go to crazyoptionstrader.com, download the ebook. The ebook looks like that. And that is what the ebook looks like. It's up there. And it will tell you a little bit more about puts and calls. And it's free. So download it, read it, enjoy it. Feel free to email me or feel free to text me or IM me on Facebook and learn a little bit more about what's going on with puts and calls. I'm noticing the futures, the Dow futures is now only up 4 points right now. So I'm pretty confident today's going to be a down day. It may not be a terribly down day, but it's going to be a down day. So all I want to say now is have an awesome, profitable day. Download the ebook, make money, and have a blast.